Animal feeds, though, and poultry producer. So quite a substantial business called Meadow Feeds, which produces feed for the chicken side of the business, but also to all sorts of other farmers. And then in the chicken game, they have brands like Earlybird and County Fair, headquartered in Pretoria and unbundled from Tiger Brands in 2001. Chris Gitter is the CEO. He's a very visible guy. Market capitalization 5.5 billion rand, price to earnings ratio 7.28, dividend yield of 7.41%. So it's interesting. The share price has gone kind of up and down over the couple of years. It's had good times and bad times. It's kind of been perceived to be too cheap because it suddenly has a period where it takes advantage of new tariffs, and then unfortunately it's seen as being at risk again. And then the price of maize goes up and down, and it's quite a tricky one to call.
Ride, but the valuation looks good. I think
very cheap now.
Dividend yield and PE both around the 7 mark.
Yeah,
that makes for a good long-term value investment, I think.
Although earnings volatility is itself a cause for concern.
Yes.
But having said that, if you do know a bit about the business and you do think that the sales are going to be okay and they're going to make more money on the other side of the business, then you could. People
Look,
have made
I
money.
think they've done really well in their feed production business,
In Meadow,
because the drought obviously helps boost the prices, and they've made significant sort of earnings growth there. However, in the chicken business, they've obviously suffered a little bit because food prices have gone up and input costs of the chickens have gone up. So
margins get squeezed. Plus, then you might have some Brazilian imports which suddenly make it in.
And now American imports and so on. But as we said earlier, the market is expected to grow by 700,000 tons of
Plus they're
demand
very
over
good
the
producers. They open a new plant in Standerton, so they've recognized they need to get their production costs down.
Correct.
Anyway, running out of time, would you say that Astral at current very depressed share prices is a good buy?
I think over 5 years it's done 40% return. I think it's a good buy here.
And it's got a good history of doing solid dividend distributions.
Yeah.
So you're going to tip in favor of hot?
Hot it is.
Okay, I'll join you on that one.